Like to welcome everybody to this issue of Information Line. This is May 2024, and right off the bat, we've got a good friend, very good friend, incredible guest of many, many years, Keith Fitz-Gerald of One Bar Ahead. And I'm very excited to have this interview. Keith has been kicking it for as long as I can remember. He's a blood brother of mine, and I want to hear his views on what's going on in this crazy market right now. So, Keith, welcome to the show. Welcome to the newsletter, if you will.
Thank you very much. It's an honor to be here, as always. Appreciate it, my friend.
No, anytime, anytime. And I wanna pick your brain here. So I hope you're ready to open up.
Well, that
Starting
assumes I
off with,
still that assumes I still have some, Rich. So we'll
oh,
find
I
out.
know you have. I know you do. So we're going to start off with what's on everybody's mind, which
Okay.
is the Fed. And I know you and I have talked in the past. I know we have clear thoughts on the Fed and where they're going with things. So the March CPI came out here recently, ticking up higher, as did January and February. And my question is, would a CPI at 3.5% go in the wrong direction? Are we actually going to see any rate cuts this year?
Well, as you know, I mean, this is a tricky subject, right? And it's a tricky subject on a couple different levels. Number one, my belief is that the Fed is an irrelevant body now. It is playing with antique models. It's playing with hundreds of PhDs, not one of whom or very few of whom understand how real money actually works. So when you get a reading like that, I think you've got to take it with a very large grain of salt. The Fed claims it's data driven, but what that really means, Rich, when you think about it, is they're looking in the rear view mirror because every data point they refer to is either revised or adjusted several months after it prints. So, I look at that and I say, okay, it's just nothing more than a relative barometer. And in fact, I'll be even more blunt than that. I think the Fed is potentially so far out to lunch that they're an insult to people who are actually out to lunch. So I don't spend a lot of time worrying about it. I don't spend a lot of time thinking about it. The only thing that interests me when it comes to the Fed is how traders think any particular data point is going to make the Fed react, not how the Fed reacts itself.
Gotcha. So I think what I hear you're saying is it really does make a difference what the heck they do. I've contended that even more so that interest rates have very little impact when Congress isn't giving them any sort of support in terms of a balanced budget, et cetera. Where do you stand on that?
Well, I've been very vocal on many of the national, international media outlets that I've appeared on this year about that. I think the Fed does not have a rates and labor problem like everybody thinks. In fact, I think they're just as wrong about rates and labor as they were about transitory. The Fed actually has a fiscal problem because as long as Congress continues to spend money, and it doesn't matter left, right, blue, red, I mean, forget that. Take politics out of the equation. As long as our government and governments around the world continue to spend, they may as well be taking blood out of the left arm and putting it into the right arm. They can't do what they need to do.
I'm 100% on board with you. So in that environment, what's an investor to do? How does an investor navigate these waters?
Well, actually, it sounds a lot more complicated than it is, and this is a kind of a funny thing. We talk with our clients around the world about this. We got clients in 40 countries now reading our research. The thing about this is that people want to make things complicated. It doesn't have to be complicated. You got to do three things as an investor. First, you got to get your emotions out of the equation. Period. End of discussion. If you're going to react day to day to the headlines, I'm sorry, but you're a speculator. You're not an investor. So that's the first decision you got to make. Am I investing or speculating? Because the last thing you want to do is think you're one and find out the hard way you're the other. The second thing you got to do is you got to focus on the big sweeping themes that are changing humanity. AI is a great example. People talk about it as if it's a technology, but what they don't understand, it is the single biggest investing technology opportunity in recorded human history. This isn't going away anytime soon, and there are trillions of dollars that are going to get spent no matter who's in the White House, no matter what the Fed does, no matter which direction rates go. Those are all arguments that get swept away under the rug if you're an investor and you're looking at the big picture. Second thing you got to do is you got to focus on the big names only, because my view and my research, 40 plus years at this point, suggests that you want the fortress-like balance sheets, you want the companies that are capable of changing consumer behavior and can put up the numbers anyway in what I call a despite it all market. And third, you want to use the right tactics to control risk as part of the buying process, not an afterthought, which is how most people do it if they think about risk at all.
Gotcha. Now, speaking of risk, I've talked with you many times over the years, and I know where you come down on this. I kind of wanted you to share this with our listeners. You know, you go to a financial planner, and the first thing they want to do is spread everything out all over the
Oh,
place, protect you from risk, right? So you don't lose everything in your portfolio, and you've got a whole different approach. I mean, you're kind of laser focused like a sniper. You want to go after the very biggest, the very best opportunities and forget about the rest, right? So talk to me a little bit of that. What drives that mentality for you?
yeah, it's invest in the best, ignore the rest is really the way we verbalize that, right? And diversification in this is not going to earn me any brownie points, and I'm going to be uninvited again from every cocktail party on Wall Street for the next 1,000 years.
We'll always invite you, Keith. Don't worry about that.
Thank you very much. But diversification is going to go down as one of the most broadly accepted yet flawed investing theories in recorded history. It worked when it was created, but it was based on real, stocks, bonds, and real estate. It's three different asset classes. But what we know now is the problem with diversification is that you're playing not to lose. That's why, for example, diversification hasn't worked as a theory for over a decade now. The problem is one most investors don't see coming, Rich. They don't own enough of the right stocks. Now, let me give you an example. So, for example, the S&P 500, very popular index investment. People love to diversify into the index. That's great. But research shows anything more than about 20, 25 stocks, you're adding risk but not return. And I'll prove that quantitatively. I pulled some numbers. I had a hunch this might come up. So over the last 10 years, the S&P 500, as measured by SPY, very common ETF, has done, 236%. Fantastic. No gripes there. That's
Nothing to
great if
sneeze at.
you're 10 years. I mean, that's wonderful, right?
Yeah.
But NVIDIA has done 20,543%, even after all the selling as of the day we're recording this. If you look at Apple and Microsoft, you're talking about 1,100%. Even Tesla, which is the poster child for bad behavior at the moment, is 1,136%. So the point I want to make is this. It's a problem that most investors don't understand. It's not how you spread your money around willy-nilly. It's how you concentrate it that matters. Now, again, excuse me for blathering on here, but people talk all the time. They want to emulate Warren Buffett. They want to emulate Sir John Templeton. They want to emulate all these other people. They don't understand, or they fail to grasp. They fail to put the dots together. Warren Buffett's got 75, 85, 90% of his portfolio in just 6 stocks or less. If you look at Templeton, he did the same thing. If you look at even Peter Lynch, go with what you know, one of the most famous investors of all time, picked his bets carefully, and he lasered in on them. Ray Dalio, same thing. Ron Barron, same thing. That's exactly why we focus on being in to win. Because if you don't, you won't.
It's a pretty good crowd to be in. I'll add Keith Fitz-Gerald to that
Thank
list.
you.
Take it to my world at this point. You've been super kind to mention us to OBAers that are looking to add gold to their portfolio. Where do you stand? We're having a pretty good run here all of a sudden with gold and silver. It's been a long time coming. Where do you stand on the barbarous relic right now?
The barbarous relic, indeed.
Of course, that's what everybody calls it, right?
I
We know
know.
better.
Well, this is another one of these things, right? The market moves in these broad, sweeping themes, trends, movement, momentum, whatever term you want to use, right? My attitude on gold is very simple, that every investor needs at least some gold. Now, how you own it is up to you. It's up to your clients. It's up to our people who come to you. It's up to anybody listening or watching. It doesn't matter. I think everybody needs to own some gold right now, but they don't need to own it because they think it's going to $5,000. They need to own it because they sure as hell better hope everything doesn't go to $5,000. That's the real secret to gold. It's a stabilizer, it's an influence to store value. It is all of those things that help you get a smoother ride with the rest of your portfolio, which is why I suggest you own it.
Yeah, and that's one of the reasons we connected so many years ago. I mean,
Yep,
we're a gold dealer for 42 years, but we sell it as wealth insurance. And I'm with you. I would rather
exactly.
own 10% in gold and then hope that it does nothing or falls while 90% of my portfolio goes to the moon.
Exactly.
That's what gold's all about. It's not about a profit play. So, but let's talk about a profit play. You've done a great job. I know because I get your one bar ahead. I listen to the comments on the Fridays. You get the questions from all your OBAers. Laudatory remarks all the time about how happy they are to be with you, the wonderful guidance they're getting from you. If our readers here at Asset Strategies are interested in joining your community, how can they do that?
Well, you're very kind. Thank you. I mean, we've been extraordinarily blessed to have achieved what we've achieved together. And the OBA family understands that we win some, we lose some. But overall, we've been really, really fortunate to get dang near everything right for a long period of time. Now, one of these days, truth be told, Rich, I'm going to be horrifically wrong. I just hope it's not tomorrow,
We'll
right?
revert to the mean, but okay.
Yep. I mean, let's just, just be clear about this. I put my shoes on just like everybody else does. But, so the easiest thing to do is just come to the URL. It's my name, keithfitz-gerald.com. Get to know me through the 5 with Fitz. It's free. A lot of people love it. We've got 30,000 readers a day or something like that, looking at it in 40 different countries. And then, of course, if you decide you like it, you decide you want more, I'd love the opportunity to earn everybody's trust, goodwill, and business if they decide to pay for the research that's in one bar ahead.
That's fantastic, and I do suggest that you take Keith up on that offer. I read the 5 with Fitz every day. It's a quick snapshot of what's going on in the market. I had a laugh the other day. I think it came in and said, this is a 4.639 minute read. And I'm like, you know what? I think I could do it in 4.62. So
well, you're absolutely competitive. Well, as you know, I mean, so people ask me all the time, Rich, where did the 5 with Fitz come from? And in contrast to the rest of the industry that just makes this stuff up as they go along, I've written the 5 with Fitz for my own use to clarify my own thinking as I'm investing and trading the markets for years. Somebody said during COVID, hey, you ought to publish that. And I thought, yeah, nobody's going to be interested in that. My biggest fear was I'd throw a party and nobody'd show up. But in fact, the opposite has happened and has taken on a life of its own. So I personally still write the thing every day. And if I'm on my job and there's great stuff in the headlines and good opportunities, you'll get it pretty quickly after the market opens every day. If I'm looking and I want to find something meaningful, I'm not going to dazzle everybody with BS. I'm going to put out something that's meaningful and hopefully actionable.
Yeah, and I can attest to that. Before I let you go, one quick question. If you had to leave one of the most important things with investors at this point in time, what do you think it would be?
Oh, my
Putting you on the spot here.
Well, actually, it's funny. There's so many things you can choose from, but here is the point that I think everybody needs to understand right now, particularly if they're feeling uncomfortable, if they're getting uncertain about the headlines, if there's a lot of cross currents. It's a very complicated market environment right now. Funny enough, the thing that they need to come to terms with is actually a person, and that particular person is looking back at them in the mirror every single day. That's the person you got to get under control if you want to navigate today's markets profitably. And it's absolutely possible to do that. But people fall prey to the noise, to the things, to the internet, to the smartphone, to the headlines. Turn all that stuff off. Look at the person in the mirror, know who you're dealing with, why you're investing, and what you want to accomplish. Everything gets into simple after that.
I couldn't have said it better myself. Keith, thanks once again for joining us. You're welcome back anytime. I don't care what the naysayers or the blacklisters or whatever do. You're welcome here at ASI all the time. And
thank you.
Please, I urge you, go ahead and take Keith up on his offer. Join his community. I don't think you'll be disappointed. I haven't met one person that was at this point. So Keith, we love you.
Kind.
Thank you.
Thank you.